Russia bombs safety corridors as the fighting escalates in Ukraine. Local markets outperform other nations on the back of soaring commodity prices, and some good news out of China for Australia. It's Monday, the 7th of March 2022. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. A nice weekend?
Yes, it was a lovely weekend. Thank you, Sean. I think about everyone heading back into the office again this week. They've had a week now back at the office for Sydney and Melbourne. And you know what I reckon it's time for, Sean?
I know where you're going here. Yes, go on.
I reckon everyone's had a week to settle back in to office life. Now it's the time to start spamming your colleagues with advice about listening to Fear and Greed.
Excellent idea. Excellent idea, Michael. Everyone should be out there sharing and recommending Fear and Greed, left, right and centre, a unreserved plug for us.
I like it. I like it.
Tell your friends.
That's right. And of course, you can tell them as well about Sean's chat today with John Ayoub from Wilson Asset Management about the stocks to hold in times of war. It is a very interesting chat for anyone who is investing and trying to figure out where to put their money at the moment. And Sean, as I mentioned earlier, Russia has picked up its bombardment of Ukraine, hitting civilian targets and putting world financial markets really on edge.
12 days on, Michael, and strikes on major cities continue, with no let-up for Ukrainians. But so far, it appears that only the port city of Kherson has been lost to the Russians. A huge convoy of military equipment and vehicles remain stalled outside the capital city of Kyiv. Hopes that the conflict would be brief are diminishing, with peace talks abandoned over the weekend. Moscow and Kyiv had agreed to establish a civilian exit corridor in two cities under bombardment. That collapsed after Russia violated the ceasefire almost immediately and started attacking some residential areas, according to Ukraine. Certainly, the war is starting to seep beyond that Ukraine-Russian border. The US is now working with Poland and other NATO allies to potentially supply warplanes to Ukraine. No deal has yet been done. That would certainly be an escalation if the US supplied warplanes. Russian President Vladimir Putin said the sanctions from Western economies, which have crippled the economy and sent the ruble tumbling, were akin to declaring a war. Foreign leaders have been calling Ukrainian President Volodymyr Zelensky to offer support. He spoke to Prime Minister Scott Morrison on Saturday night, and yesterday US President Joe Biden spoke to him for 30 minutes. Meanwhile, Israel's Prime Minister Naftali Bennett had a 3-hour conversation with Mr. Putin over the weekend.
Sean, there's been a lot of talk about the potential, or at least the calls for a no-fly zone over Ukraine.
So far, NATO allies have not introduced a no-fly zone over Ukraine, despite Mr. Zelensky's requests. Why? Well, yesterday, Australian Defence Minister Peter Dutton gave us some insight into that. He said such a move could well and truly escalate concerns about a nuclear conflict. That's because if a no-fly zone is introduced, NATO allies are almost committed to shooting down planes or missiles in that no-fly zone. So it would be a dramatic escalation of the conflict. Now, the extreme volatility in financial markets is expected to continue in coming days, with oil prices trading above $115 a barrel and gold heading towards $2,000 an ounce. Iron ore prices are high and wheat is at a 13-year record, but the prices of plenty of other commodities are soaring as well. European Union natural gas, Newcastle coal, aluminium, copper and palladium are all at or near record levels.
Okay, Sean, the Australian market, all things considered, did okay last week.
Yes, it ended up 1.6% for the week, which is better than most other bourses. It fell back on Friday after the bombing of a Ukrainian nuclear facility by Russia to finish down 0.6% for the day to 7,111 points. Australian shares have outperformed because of rising commodity prices. Basically, resource stocks have gone up, and that's been enough to offset falls in most other sectors. Bond yields also fell last week. Now, that means investors are buying bonds, pushing up their price and lowering their returns or yields. It happens when investors are looking for safe havens.
And what about global markets, Sean?
Well, overseas bourses ended down last week. US shares were off 1.3% for the 5 days, China was down 1.7% and Japan was down nearly 2%. But the Eurozone bourses were off 10%. That's where they're really feeling the impact of this war. the shadow of a nuclear conflict looms large over the region. The Aussie dollar ended higher for the week, trading around 73.8 US cents, notwithstanding the greenback, is trading at an 11-month high against most other major currencies.
Largely for my own benefit, Sean, can you put a little bit of perspective around this, about what it all means for financial markets, just how significant this has been?
Sure. So if you think about it from top to bottom, from their peaks of last year, US shares are down about 10%, Japanese shares are off 15%, and European shares are off 20%. Now, the Australian market's off 7%, thanks to commodity prices. The key factor driving markets in the short term is what happens in Ukraine and the uncertainty around it. If the conflict is limited to Ukraine and oil and gas continues to flow between Europe and Russia, then financial market impact should be limited. So far, sanctions have not been placed on the energy sector, and that's providing Russia with income. However, if the energy sector is hit via sanctions and flows stop, then markets will, in all likelihood, tumble. Russia could default, energy prices will skyrocket, much more than what they are now. Inflation will become a much bigger problem. Equity markets could well drop by another 10% or so. I say all this very aware that that's secondary to the tragedy of 1.5 million people having already been displaced by the war and thousands of people who have already died.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, we spent a large part of last week talking about the floods crisis in Queensland and in New South Wales. What's the latest flood news?
Well, there's renewed major flooding in the Sydney Basin region after heavy falls on the weekend. The Hawkesbury River is expected to continue rising until sometime today. Unfortunately, there's another East Coast low forming off the coast with more rain in coming days. We'll keep a watch on that. Queensland has kicked off a flood appeal, hoping to help thousands of residents who are now mopping up. The recovery will take months, but Premier Anastasia Palaszczuk said life was starting to return to normal. About 3,000 homes and businesses still have no power, about a dozen schools remain closed today, and about 27,000 disaster support claims have already been made.
Sean, thought this was a really interesting story. Aristocrat Leisure has evacuated 1,000 staff from Ukraine. I didn't realise that Aristocrat had so many people there, and it really does kind of bring the war close to home.
It does. I mean, the Ukraine itself is known as a tech hub, and it's got a relatively low-cost, highly educated workforce, which provides services to many companies in other countries, and that's how Aristocrat uses it. The gambling and gaming machine operator has 7,000 people worldwide and reportedly has the largest footprint of any Australian company in the Ukraine. It's already helped 200 people leave the country and 150 people move from Kharkiv, which has been under constant fire, to a city closer to the Polish border. Aristocrat also employs around 500 people in Russia. While there's no sign it will do anything on that front, other multinationals are already moving. Late last week, for example, Accenture simply closed its Russian business, leaving 2,300 people without a job. Other companies have suspended operations, including the big oil companies and the consultants. So far, Aristocrat hasn't done that, but like many other companies, it will come under pressure.
Okay, now blood plasma giant CSL, Sean, is set to take control of Vifor Pharma.
Yes, it looks like CSL's $16 billion bid will be successful. It secured nearly 3/4 of the Swiss target's shares. As a result, it dropped its minimum acceptance condition of 80% and extended the offer period for another couple of weeks. The holdouts have been Swiss index funds and arbitrage funds, which were hoping for a better offer. But with 75% now in CSL's hands, that's very unlikely to happen. So those funds should fold and are now likely to sell to CSL. The Australian company launched the bid back in December. Vifor makes treatments for iron deficiency conditions and kidney diseases. Looks like CSL will own it within the next couple of months.
And Sean, I know this is one of your favourite companies, which is kind of funny because you are very much a city dweller and I can't see you having much use for anything that they sell. But Kathmandu is changing its name.
Oh, Michael, that's a bit harsh, isn't it? I mean, that retailer, I love that retailer. I mean, it's become almost synonymous with outdoor activity. Very me, I'd say.
Jury's out.
Anyway, it's going for a new look. Remember, Kathmandu also operates the surf brand Rip Curl and US-based Oboz hiking shoes. The new name, Michael, is KMD Brands. KMD Brands. It's got a new design, a new colour palette. Apparently, the brand is supposed to make it clearer what the company is about, which is owning and operating outdoor brands. I don't know how an acronym does that, Michael, but I'm not a marketing guru.
No.
Kathmandu is already a market leader, notwithstanding it was hit hard by COVID. Rip Curl is a global surf brand, and it's very much a leader in its market. And the push is to break into the top 3 brands in North America in its category and beyond. Good luck to them, but I'm still going to call them Kathmandu.
Okay, Sean, what's making headlines in today's news media?
Well, the Sydney Morning Herald is reporting that tech billionaire Mike Cannon-Brookes and international asset manager Brookfield are set to walk away from their proposal to buy AGL and fast-track the closure of its coal-fired power plants after the energy giant's board rejected a sweetened bid worth nearly $9 billion. And the Financial Review says Australian, American and British nuclear-powered submarines will operate from the East Coast under a $10 billion plan to build a naval base somewhere between Wollongong and Brisbane, prompted by fears of growing regional instability. The Prime Minister, Scott Morrison, is due to make the announcement today.
All right, running through some of the other stories around today, the latest COVID figures show 8,782 cases in New South Wales yesterday and 5 deaths. There are 43 people in intensive care with the virus. In Victoria, the case number was 5,046 and 4 deaths. Victoria has 27 people in intensive care.
It was a solid weekend for the home auction market. Sydney's preliminary clearance rate fell slightly to 74.6%, while Melbourne's clearance rate was 70.4%. Brisbane was at 70%, not bad, given all the wet weather in that state.
Sean, carbon farmers and landholders are set for a potential windfall of almost $2.6 billion after a surprise Morrison government decision which will enable them to tap into surging market demand for Australian carbon credit units. The move, which the government hopes will help satisfy calls for more carbon credits vital to reaching the nation's 2050 net zero goal, means owners of land-based projects who have agreed to deliver carbon abatement to the Commonwealth will have the option to sell to the open market instead, potentially earning more money.
German group Hochtief now owns 83% of CIMIC, Australia's biggest construction company, formerly known as Leighton's. If it gets to 90%, it can acquire the remaining 10%, and that looks like a pretty good bet, Michael.
And of course, Sean, it's been a very sad few days now in the world of cricket with the passing of Shane Warne and Rod Marsh, 2 great, larger-than-life cricketers, really, who made enormous contributions to their sport, wouldn't you say?
Absolutely. I mean, any sports lover in Australia, I think, is in shock at the moment, particularly about Shane Warne taken so young.
Okay, now what's the key overseas news this morning, Sean?
China's political elite met in the Great Hall of the People in Beijing over the weekend to support a 7.1% increase in defence spending, including enhanced combat readiness. Of course, the increased spending comes amid the war in Ukraine and growing fears that China could attack Taiwan. The military budget this year in China is $311 billion. Wow. The country also adopted an economic growth target of around 5.5% for the year ahead, while most Western countries would love to achieve growth at that pace. Remember, we were very happy with the 4.2% last year. It's actually the lowest target rate from Beijing in 3 decades. And while there's no massive increase in spending, as some economists had expected, the good news for Australia is that Beijing is ramping up its infrastructure spending. And do you know what infrastructure needs? Steel, and that needs iron ore. Very good news for the big miners. Also, former US Vice President Mike Pence has taken a thinly veiled swipe at his former boss Donald Trump, saying there was no room in the Republican Party for apologists for Putin. Last week, Mr. Trump called Mr. Putin smart, savvy, and a genius, and said the Ukraine attack wouldn't have happened on his watch.
Up next, Sean, is the Fear and Greed Daily interview, as I mentioned earlier, with John Ayoub from Wilson Asset Management.
Yes, as you mentioned at the top of the show, a great interview for investors, particularly those thinking about where do you put your money. Given the war in Ukraine, he is very much a fan of defensive stocks at the moment, but he goes through his reasoning on it. It's a really good chat.
Yeah, it certainly is. That's up next in the Fear and Greed playlist. Sean, though, as always, there is more good stuff to listen to as well in the playlist. Every Monday, for example, we've got The Week Ahead, which features our resident economist, Stephen Koukoulas. It's a bit on this week, not quite as much as last week, though.
Yeah, I mean, I think today's chat with Stephen's great because we actually really get down to where the economy's at the moment and, you know, what it's going to be like in the next few months.
Yeah, definitely a good one to check out. And, of course, you have to listen to the Sunday edition. It's rapidly becoming Sean, our most popular episode we do each week, largely because it has very little to do with business. And I'm not going to spoil it, but yesterday's episode includes your story of an incident that happened when you were visiting Greg Norman's house in Florida.
Well, yes, it was his office, but that doesn't save me from the story. Listen to it at your own risk.
No. The story is good wherever it happened. You must listen to it. It is in the Fear and Greed playlist, and it's also at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 7th of March, 2022. Make sure you're following the podcast and join us online as well on LinkedIn, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.